Unlike the insanely, incredibly hot starts that we had in 2 years, 2021 and 2022, 2023 is going to be much different with a much lower demand, higher interest rates, muted inventory levels, and expected market times to be at pre-pandemic levels. So Happy New Year. Welcome to January 2023. Hope you had a great holiday season. Sorry to open with such a negative picture, but I just want to be a realist and bring you a picture of what the real estate market is really doing. So if you can appreciate this and would like to know more and be kept informed in the future, please like or subscribe to this from wherever you're watching. Typically in January, it takes a few weeks for buyers and potential sellers to come out of the woodworks, out of that holiday fog after enjoying all the busyness that the holiday brings. And this is when the housing market slowly awakens and starts to thaw out. The issue that the housing market's experiencing this year is that we have not had that normal, typically slow start to the year since 2020. If you remember back in 21 and 22, the market was insanely hot from day one. Very few homes were on the market, crazy levels of demand, extremely low interest rates. So buyers were tripping over each other to buy whatever home came on the market. They were paying over asking price, multiple offers, very little negotiation or requests for repairs. And the housing market, it was out of control. And while it seemed like it was great from the distance, or at least how that's how the media painted it, that was an extremely challenging and stressful market for buyers, sellers, and the agents who represented them. So the change in the housing market that we're feeling today is primarily due to the higher interest rates that we're seeing, coupled with that huge jump in appreciation that homeowners have been enjoying since 2020. Remember back in 2021 and 22, mortgage rates experienced record low starts to those years. In 2021, it was 2.65, 22, 3.2%, and today we're at 6.14%, the highest start to a year since January of 2008. And as a result, the demand is at its lowest level at the beginning of the year since we began tracking back in 2004. So today, the inventory might be, I think it is at its second lowest level to start a year since we began tracking, even beating 2021, which we thought we couldn't do. But when you combine that with record low demand, the expected market time is no longer at those insane levels that we had in 2021. Instead, it's at a much more, just a slower pace that we had in 2016 and 18. And we sit at a expected market time today of 84 days. It's not near as slow as 2014 or 15, but the few buyers that do remain in the system are just not tripping over each other to purchase. They're taking their time. They're very rarely going above asking price. They're negotiating strongly, and they're analyzing before they put offers on the home, taking their time. They're very particular about location, upgrades, amenities, and the age of the property. So I'm confident the Orange County market's going to thaw and improve from here. More homeowners are going to opt to sell, and the active inventory will increase. Buyer demand is also going to increase with the holidays in the rearview mirror, as it always does, regardless of the pace of the market. And further fueling an increase in demand will be that the mortgage rates hopefully will continue to drop. They are dropped from back in October, November, they were 7.25%. And today, again, they're at 6.14%. So expect home values to continue to fall a bit until mortgage rates drop below 5.5% or so. So heads up to you sellers out there. If you guys are out holding, well, if you're out there waiting for the spring market in anticipation of a quick sale and higher price than the last comp that sold, that's simply not going to happen. Instead, the sellers are going to be looking at a much more sluggish market, muted demand, and buyers taking their time to purchase. So as in any market, but this one extremely important is pricing. So that's going to be crucial to any success you have as a seller. But heads up to buyers, while home values may be falling right now, lowball offers will be a waste of everybody's time, including your own. Distressed sellers, foreclosures, and short sales are just not a component of today's market. So there's a real lack of panic selling, as I mentioned in last month's video. Most sellers don't have to sell. And, there's not going to be these major deals that there were back in the Great Recession time of 2008, 2011. The homeowners are going to continue to hunker down in their homes, not willing to move due to their current underlying locked-in mortgage rates. So, the difference between their low fixed mortgage rate and today's rate is significant and will preclude many homeowners from listing their home for sale and moving to another home. So this is, again, going to continue until mortgage rates drop below or in the mid fives and so forth. So you can expect that to continue. As more homes come on the market, expect demand levels to climb. It's going to dramatically improve, I think, over the next 2 months. Continues to climb until it peaks somewhere at the end of May, well, mid-May, somewhere in there. So, yet, demand is going to remain muted just as long as those interest rates remain above 6%. So, as they get below 6%, you're going to start to see the demand improve. So, with demand falling faster than supply, the expected market time has increased from 76 days to 84 days in just the past couple of weeks. Last year, expected market time, 25 days. So if you, and then the 3-year average prior to COVID, market time was 104 days. So slightly slower pace than we are at today, but still not what we've been like. So with supply rising and demand falling, the overall market time for luxury homes priced above 2 million has increased from 147 days to 191 days in just the past month. So in 2020, just prior to the pandemic, that time was 269 days. So anyway, it's still much better than it was. But as for Peak into Laguna Beach specifically, we started December 22 with 95 homes on the market, and today we're sitting at 92. So a slight dip here. After sales in October of 19, followed by 16 in November, that downward trend continued in December with only 12 sales and a high sale of 5499 on Temple Hills. So if you look at year over year comparisons, last December, we had 36 sales in Laguna, 12 to 36, significant difference. December 21, we had a sale of 43 million in Irvine Cove. The biggest concern I have, however, in Laguna is when you compare year over year. In 2021, the entire year, we had 574 sales in Laguna Beach. And in 2022, we only had 322. So I hate to leave us on such a concerning bit of information, but I'm just, again, trying to be realistic with you, bring you accurate information to help guide you through the market and assisting in making your real estate decisions. So please, again, if you like receiving this, like or subscribe. And as always, I'd love to get your feedback, any questions you have, and anything else you'd like to see me include in these updates. Reach out to me. Until February, have a great month. Thank you.